We're going to do a brief video on TWLO Stock, TWLO Stock Review, and we've got a daily chart for you in front of us with a green 5-day moving average, a red 20-day moving average, and a blue 200-day moving average. Let's see if we can get this to look a little better. And we can see up here in October of 2021, we had a final test of the 200-day moving average, and then this stock entered into a bear market with a huge gap from about 353 down to about 302. So that's almost a $50 gap there, which is huge. This stock just went into a classic bear market. It's been in a bear market ever since. You can see it had some decent respect for the 20-day moving average, not perfect, but decent, and some false moves above it here in February of 22 in the spring. But basically, this stock has just been a constant steady downward movement, with exception of this rally here, which was probably a decent rally. 125 is about a $50 rally there, but just basically closing this gap. Whenever this gap between the 200 and the price gets too big, you're going to see a rally or some severe sideways movement. And what you saw here was a $50 rally to close the gap, and now what you're seeing here is some sideways movement to close the gap between price and the 200-day moving average. 200-day moving average gives the market some kind of idea of what's going on, and when it gets too far away, the market gets lost and people start thinking other things, and so that's what's going on. This stock essentially is in a deep bear market. If you take a look and try to let's see if we can expand it out just a little bit here. This stock is distributing. You have several things going on here. You have distribution here. And then you see they just pushed it right back down to a newer level. Right here it was oscillating around 100. They distributed, pushed it down here to about 85, 86, 87. Distributed, pushed it down here now to about the 71, 72 level. So they're still trying to find a bottom in this stock. You can see that in this view, the slope of this 200-day moving average is extreme, and you don't necessarily have to look at it like that. But the way we're looking at this stock price, you can see. I'm gonna call this a 176 price in March, and we're down here now at $64. So we're down $100 from March. So while it looks extreme, it's fairly accurate. This stock again has been distributing, trying to find a new low, and it's now legitimately in its third phase of doing that. I suspect it's going to find its low right around in here. The $64 level looks like it might be a low. However, in order to get this stock back up to this range here, this 115-ish, let's say by the third week of October, to get this stock up to the 110 range, this stock's got to get above this 20-day moving average. So we have to see this 20-day moving average turn around. We have to see the 5-day give it some kind of straight line support as it rallies hard up to the 110 level. Is it possible? Yeah, I definitely think it's possible. There's too much space between the 200-day and the price here. You could easily see this kind of $50 rally, not necessarily 50 bucks, we're talking $30, $40, but you could easily see that kind of rally out of the stock. It's done it before several times. It did it here, it did it here. So I don't think that's a rally from 73 to 110, 77 to 110 in a month is necessarily out of the range of this stock. Is it going to happen? I don't know. This is for entertainment purposes only. It's my opinion, but I see that as a distinct possibility. This stock could rally to 105 to 110 by, say, some early parts of October. Could it go much lower? Yes, it absolutely could. In order to do that, though, you'll notice that the price today is above the 20-day moving average. And we see the 5 days turned up. Now, 5-day turning up is no big deal. It turns up, it turns down, it's no big deal. But we are above the 20 for the first time since, mid-August, right? We got above here and here. So this week we're getting above the 20-day. So if it continues to get above the 20-day, stay above the 20-day, close above the 20-day, and of course the 5 continues its movement up, we get a little turn here in this 20-day moving average, then I think we got a good shot at the 110-ish by early October. I think it's a reasonable move. Again, the stock's in a bear market. That means something could come out. You could have bad news. You could have all kinds of stuff, and turn this stock into a rout without too much trouble. But because it is in a serious bear market. But at the end of the day, I think it's due for a rally to about the 110 range at least. To put it back in line technically where it looks like it should be to me. So again, all my own opinion, all for entertainment purposes only. You have to use your own judgment. I check this stock. We do not follow it. I can check and see why, but we don't follow it on RBAM Research algorithmically generated prices, which is what these are. We put 190 plus stocks out every morning before 7 a.m. Monday through Friday. These are today's, and zeros means there's no entry prices. You can see Apple has entry prices. There's a bunch of entry prices here today, yesterday, and the day before it was a little light. But we have 3 columns here. These are buy-onlys, 1, 5, and 20-day holding periods. The way this works is you buy today in this column, assuming your own analysis says it's a good idea, then close out worst case just before close at a loss tomorrow, or take your profits as soon as you get them. So these are trading days. So buy in this column, close out just before the market closes tomorrow, or profits before if you can get them. And the same thing 5 and 20. If you bought in the 20-day column, you'd buy today, take your profits as soon as you get them, or close out worst case at a loss just before the market closes on the 20th day. That's the way this algorithm works. We cover 190 stocks. You can get them all absolutely free at rbamresearch.com. No credit card required. We update them before 7 a.m. and there's a link in the description below to rbamresearch.com. You just go there, sign up, and get them, again, absolutely free. We also cover the major forex pairs. We cover BTC for crypto. We cover the most liquid futures, and everything but the stocks. You get a buy or a short every morning. Stocks are long onlys right now. The question I would like you to answer for us is in the comment section below. Do you like these moving averages, and do you think they're any good? If you like them, let us know. If you don't like moving averages and you think they're no good at all, let us know that as well and tell us why. If you like this video, please click the like button. If you want to subscribe, please do that. Keep in mind everything you've seen or heard on here, including the entry prices and our commentaries, for entertainment purposes only. Can't use it for anything other than entertainment. You have to use your own analysis, and you must trade at your own risk.